and thank you for joining us again today for our second session of the 2020 Landscape in Focus series and the FBAA eSummit session. Here in South Australia and the Northern Territory, this is our first of the second in the series of our first big event for the year, which will all be conducted by electronic means as we're seeing. But we wanted to still be able to provide you with information on the industry and to ensure that you're kept up to date. And since we can't do this face to face, then digitally is the way to go these days, as we all know. So the first thing that I'd like to mention is that for this session, we get another CPD hour allocated, and the CPD code will be emailed to you along with a survey at the end of the session. So please complete the survey and of course claim your CPD point. I'd like to extend a huge thank you to our sponsors for their support. They've been supporting us all through this crisis and with all of the other online efforts that Pete and the team have been putting together through the last couple of months. So you can see them on the screen there, and please, if you think that they can help you, there'll be contact details attached to the PDF in the control panel of GoToWebinar for you to download. So please get in touch with them to see what they can do to help. FBAA members will receive a 10% discount off their next year's membership every time they refer a new member who joins FBAA. So keep your eye out for other members of the industry who are maybe not quite satisfied with their current association, or maybe they're new to the industry and looking for someone to join. So please don't hesitate to recommend FBAA. Please also remember that the FBAA app is available for you to download onto your mobile phone. In that, it's got calculators, access to the website, and quite a lot of other information that's very useful for you on a day-to-day basis. Also, you can go direct to the website. So log into the website, and there are tools and resources there to assist you with running your business and promoting it, and also news and information about the regulatory happenings in the industry. And included in that is the broker support program, which is available for everyone to access on the website. And you'll find a lot of measures there to assist you through the COVID-19 period and the recovery period that's coming. The agendas for today's session is attached as a PDF in the handout tab on GoToWebinar control panel. So download that to follow along. So without further ado, I'd like to introduce our first speaker, Fiona Gray from ALI Group, presenting on Loan Protection Plan, Good for Clients, Good for Business. Welcome, Fiona.
Thanks, Joff. Hi, everyone. Thanks for joining us today, and thanks for giving me the opportunity to present to everyone. First of all, I just need to give everyone this general advice disclaimer, so if you can all have a quick read of that. And just be mindful that anything that information that I provide in this presentation today is of a general advice nature. So a little bit about ALI, which we are the leading provider of loan protection in Australia, and we deal almost exclusively with mortgage brokers. We've protected 203,000 clients and counting. That was the number as at May. We've paid over $67 million in commissions to mortgage brokers, $114 million in claims paid to clients of mortgage brokers. And one thing that we're really proud of is last year when we commissioned Core Data to do an NPS survey with our brokers and also our customers. We had a fantastic score of 79.7. What was particularly interesting is Core Data's own Simon Elwig commented that to get a broker score of 79.7 is one of the highest scores that he's ever seen in a third-party space. So I think that just really emphasises and highlights the fact that our policyholders, but also our brokers, really highly value the product and service that we provide. So our mission at ALI is to protect Australian home and property buyers from financial hardship. It lies at the very core of everything we do. And together with brokers, we hope to make loan protection synonymous with mortgages. So just like when people buy a car and automatically think about getting insurance, at the very least, third-party compulsory insurance, we want, with the home loan process, people to think of the fact that it's also important to consider their risks. So if something was to happen to them, that they would have some cover to lean on, which unfortunately most Australians don't. So our current loan protection plan product has 3 core features. Obviously, it's not LMI, and everybody that does offer the product can give each customer a complimentary 30 days free look at the product. But those 3 core features of the product are a death and terminal illness benefit, which we set at the loan amount, and the customer's got the flexibility to dial that down. And then we've got our living benefit, which is really the flagship of our cover. That's our trauma cover that covers for 11 serious conditions, with the first 3 being probably the ones that are most claimed, being cancer, heart attack and stroke. And we also have the involuntary unemployment benefit. So filling an important gap. This is probably my favourite graphic that we use at ALI because I think it really does a good job of painting the picture of the opportunity that you guys have as mortgage brokers when it comes to discussing risk with your customers and ensuring that they've considered those risks. Now, if you look at the triangle, where we should all of us Australians should be aiming for is to reach for the top of the triangle and sit down with a financial advisor. But sadly, many of us don't get there, and that means that the majority of us are down the bottom of the triangle, just reliant on that default cover that we've got with our corporate super, which is typically on average maybe $200,000 of death cover, which we know is well below the average loan size, and it won't have any trauma cover unless they had that trauma cover added prior to 2014. In 2014, it was actually legislated that you can't have trauma cover added to the cover within your super. So a lot of people are under the misunderstanding that they think that if they get sick with a serious illness but don't die, that default cover within their super will assist them, but sadly it won't. And interestingly, at ALI, we pay more than twice as many trauma claims, so that area where people get sick, as we do death claims. So that's the area that people really need it, but that's what's missing from their corporate super. So that's where in the middle, you guys have the opportunity to use our product. Brokers write 60% of loans in Australia. So you're seeing a huge chunk of the population. You're having that opportunity to educate and inform them about the potential gap with relying on that cover in their super, and have that conversation and help them make that informed decision. Again, back on the financial advisors, that is the best case scenario. We absolutely are supportive of that. And I think a lot of brokers do already refer to a financial planner, but only a very small percentage of people actually do go ahead with full advice. In fact, in the 20 to 35-year-old age bracket, it's only 4%, and 13% of the 35 to 44-year-old bracket. So a very small percentage of us actually go ahead with full advice. Why is it so important? Well, I think we all know someone that, has been impacted by one of these statistics. We could talk about statistics all day. I think, you know, one of the things that I certainly noticed personally a lot these days is seeing the GoFundMe pages on social media or just general fundraising events to support people. That's typically because people have got medical expenses or they haven't been able to work for a period of time because they're battling something, and they've gone to claim and they've found that they do have that gap with that default cover that they had with their super, and have no other means by which to get by in that situation. So yeah, some quite striking statistics there, but I don't think it's anything that would surprise anyone there. With ALI, I talked at the very beginning about $114 million has been paid out in claims to clients of mortgage brokers that use our product as part of their loan process. And these are just some examples of recent claims that we've paid. You'll see cancer features a lot there. And some of these policies people have had for 10 years and plus. Some of them have had less than a year. So I know, for example, just late last week, a local connective broker, I received notification that we just paid $144,000 to a claim for bowel cancer for a customer of hers that she did a loan for back in 2016. She put the ALI cover in place, and thankfully that family now, obviously, whilst it's you know, not going to take away the illness side of things and what they're experiencing going through that, but at least financially they don't have to worry about money, because I'm sure that $144,000, thanks to that broker putting in place that cover back in 2016, has made a huge difference. So as I said, this is just some of the recent claims that we've paid. Now, the financial return for the 10-minute investment that you make when offering ALI is about $1,400 in commission, and there's a couple of models we offer. We offer a hybrid model with an upfront and a trail, and if you do that, you're usually looking around $600 in upfront per policy. Or if you do a hybrid trail only model, it's usually around that $200, just over $200 a year, and that's based on an average life of a policy of 7 years, although we are closer to around the 8-year mark in average life of a policy. The other good thing about insurance trail is, unlike home loan trail that reduces over time, insurance trail grows organically over time. So definitely a nice extra nest egg with your trail book. If anyone is interested in becoming authorised, that you're not currently authorised, you can express your interest on our ALI website, and then ALI will be in touch with you to talk you through that process. There's just a short online course you need to complete, and then you'll meet face-to-face with the ALI BDM to get you fully up and running. Now, just very quickly to finish off, I did mention when I talked about our product earlier that that's our current product. We're really excited that on the 22nd of June, we're launching our enhanced product. It's changing the name from Loan Protection Plan to My Protection Plan. And the reason for the name change is because we really just wanted to emphasise some of the key benefits about our product. You know, the fact that it's independent of the loan, so we pay claims proceeds directly to the borrower as opposed to into the loan. That means also that the cover's portable, so as you guys over the journey with your customers over the years might refinance them, and the cover will follow them. So we really wanted to focus on the fact that our cover is about protecting the customer, so therefore My Protection Plan. The other thing we've done is it's really important to us to make sure that our trauma benefits are relevant, and that we're getting across and paying as many claims as we can for our policy holders. So with heart conditions being, heart disease and heart conditions being one of the most significant trauma events that Australians can experience, the stats show us that I think it's heart disease is the biggest killer of females in Australia. We just wanted to make sure that we were getting across as many as we can. So we've added surgery to the aorta and cardiomyopathy as 2 additional trauma benefits, taking it from 11 to 13, and we think that will make a significant impact in the number of trauma claims that we pay. The other change is that the accidental injury benefit is now our new complementary feature. It used to be a 5-year complementary involuntary unemployment benefit. Sadly, we are losing that. So there is an opportunity over the next couple of weeks just to take advantage of that while we still have it. But one of the frustrations with that benefit was that it was only complementary for the first 5 years and then it ended. With this new accidental injury benefit, it is complementary for the life of the cover. So they'll have that for the whole time they have the cover. So here's a bit more of a detailed summary of the changes, just for you to skim over. But I've pretty much covered most of the things that were there. Now, I can't see any questions in the chat. So unless anyone has got any other questions, that's it from me.
Thanks, Fiona. That was a great presentation, and we're obviously going to need to get on top of the new complementary cover there.
Yeah, absolutely.
So,
sorry?
Go on.
I was just going to say, for anyone that is currently authorised with us that's joining us today, you would have got an email last week and then a reminder yesterday just to get on and do your transition training to the new enhanced product and make sure you're compliant. It will take you 10-15 minutes. It's super easy just to jump on and get that training done. So if you can get that done, that would be great.
Okay, thanks, Fiona. Okay, moving on. We're looking at the moment, we're going to have messages from 4 of our event sponsors, AAMC, IAA, Pepper and SUNCORPO, to bring us up to date with what they're currently doing for the industry and for their customers.
Conducted by our experienced industry trainers to make learning interactive and enjoyable. These classes are not webinars, so you have the opportunity to ask questions and discuss topics with our trainers and other students. Sessions are available for those seeking to complete their finance broking qualification. We are also running complimentary 3-hour recognition of prior learning classes to assist existing bankers and brokers to gain their qualification more seamlessly. Take the opportunity to upgrade to your diploma starting today. Register your interest via the virtual classroom banner found on our website.
Hello everyone, this is Darren Lodes from Insurance Advisor Net. Just touching base with you all. I hope you're all keeping well through these crazy times that we're all going through. Just a quick grab, the one bit of advice I'd give you in the time that I've got is for those that have got their policies due this month, and I know there's quite a lot of you, maybe this year's the year to take advantage of our premium funding option where you can space the payments out over 10 months rather than an upfront payment, just to help you cash flow through these times. Any other problems at all, you guys know where to get us, and we're here to help you where we can. Stay well and we'll get through this together. Cheers.
Hi, Aaron Milburn from Pepper Money, here to say a huge thank you to FBAA members. Throughout these really trying times over the last couple of months, we've partnered together to make sure your customers are supported throughout. FBAA members have been critical to the success and growth of Pepper Money across Australia, and I want to say thank you for that and wish you all the very best in 2020 and into 2021 together.
These times are strange, like never before. So we're all doing our part. We're staying indoors. Our schools are different, the classrooms are quiet, but learning's still happening if you know where to find it. We're quick to adapt, we're moving online, but we have to be careful to leave no one behind. To keep kids connected and moving ahead, we're giving them access to the internet. SUNCORPO is providing $1 million to the Smith family to support online learning at home. Visit thesmithfamily.com.au to learn more. That's the SUNCORPO spirit.
Okay, next up, we're having some information from Peter White on where we stand in 2020. And Peter's always got the good oil for us. So welcome, Peter. And we're all looking forward to hearing what you've got to say.
Thanks, Joff. Appreciate that. And good day, everybody.
Can you hear me,
Trust
Peter?
you're keeping well. Yes, mate. Yep, trust everybody's keeping well. And we'll run you through a little bit of an update as to what's going on. Hey, how good is SUNCORPO donating $1 million to help kids have access to the internet? Hey, that's really great. Yeah, let's move on and have a chat. So there's a fairly famous saying by Woodrow Wilson that says the only use of an obstacle is to be overcome. And you'd think in 2019 we've overcome a lot of obstacles through royal commissions, federal elections, and regardless of what side of politics you're on, having the current coalition government staying in power meant our commissions were stable for a while longer rather than them being turned into something else of what they are today. So yeah, that was a good thing for us. And then of course we moved in the financial abuse directions, financial abuse declarations, away from being that into being confirmations. Otherwise nobody could have signed them. So yeah, there's a fair few obstacles there, but then we hit 2020. And I wish somebody had hit the reset button. There was bushfires, we had flooding, we had volcano eruptions over there at White Island in New Zealand. We've had earthquakes around the place. And of course, COVID-19, which has certainly thrown a whole lot of curveballs to us all. But such is the power and strength of our industry. We've all risen to the challenge and are all doing exceptionally well, which is really great to see and hear. But it ain't over yet. There's no time for complacencies, and there's still a lot to be done because this little animal hasn't gone away. Even though in some cases it's been put on hold a bit, it's still there. And what that means at the moment, well, the main one, of course, is recommendation 1.2 from the Royal Commission being the best interest duty, which the government very kindly came out after a lot of lobbying and I was going to say pushing and shoving, but yeah, in a lobbying kind of way. You know, got put back to commence from 1 January 2021. And that gives us more time to prepare. And there's a lot of people already starting to implement a best interest duty into their business, which is really, really good. We've done nothing at this stage as far as communicating back out to our members further because the regulatory guide hasn't been completed. Until the RG is done, there could be things there that are not necessarily what you might think they are, need to be dealt with properly. So our position has been taken that once that regulatory guide is out, and ASIC did say when they said, made the announcement that things have been pushed back to the beginning of 2021, that the regulatory guide would be out around mid-year. So in my usual fashion, I said, well, that's bloody well and good. What's mid-year mean? So I went back to ASIC for further clarification. And they basically said, look, we don't know ourselves yet. So I'm working that's going to be probably late July. So our plan at the moment is come August. Now, whether that's mid or late August or early August, we haven't determined yet. But we're currently building what we call a 101 best practice guide for implementation of a best interest duty in your business. Now, if somebody can help me out with a shorter title than that, I'd be really happy because it's a real hell of a mouthful. I'm actually really pleased I didn't stumble over it because I quite often do. But that'll be a very short best practice guide, 101 basic thing to understand what this law means, what its intent is, and what the understanding is as to how you should implement it in your business. But it's not going to give you the templates. We can't do that because the templates to comply and the methodology to comply is the responsibility of the ACL or the aggregator. Could be one of the two. The same thing, I should say. But the aggregator needs to give direction on that or your ACL. We are not legally accountable for your compliance obligation. That needs to come from them, and we don't want to overlap or overstep our boundaries as to what we should or shouldn't do. But we will give you this 101 best practice guide, which will understand the intent of the law and how that intent should play out in your business. And then it's just a matter of building your compliance underneath that. And additionally, we'll then start an education series. If we can do it face-to-face, we'll do it around the country. Otherwise, it'll be webinar-based. And either way, it'll wound up getting recorded and being put on the FBAA's YouTube channel, where you can find everything that we do digitally there. And we'll go through an education piece that builds on top of that 101 best practice guide for implementation in business. And if for some chance, and I have had a couple of people come to me saying, hey, Pete, I've got no documents for whatever reason. Can you refer me to someone who can do it for me? Yes, we can. We can put you in touch with someone who can actually do that for you as a separate thing. But let's not rush too far to that, because for now, we need to see the finalisation of the regulatory guide for best interest duty, and then we're right to step in front of it. Because you also don't want to fire the gun too soon, because if you do all this work and you don't start practicing it now, you may forget it by the time you get to the end of the year. So let's find that happy medium, that happy balance to make sure it works for everyone. And we know all the ifs, buts, and maybes that apply in the regulatory guide. And in addition to that, you can also find a whole host of social media content and collateral that will be given to you as well, which will largely start to promote that you have to, by law now, or as we get to January, comply to this best interest duty, but hey, your banks don't have to. So yeah, we'll be putting some social media collateral around for you for that as well, so you can promote that out to your databases. The other piece that sits out the back end, which is the thorn in everybody's claw, is clawbacks. Unfortunately, government said it's not changing, and they've been most frank and pointed about that. I brought it up again the first week of December when I was down in Parliament House in Canberra and speaking with Treasury and Federal Minister that we've been working with, or a couple of Federal Ministers actually. And I was told most categorically, it's not on the agenda, it ain't happening, it is what it is, so move on. Well, I don't move on that easy. So I'm actually at the early stages, admittedly, collating a research piece to be done in regards to clawbacks both within Australia through various different industries within Australia and additionally overseas, which I've already got the data on through the International Mortgage Brokers Federation, which I chair. So we've got the international data, but we're going to collate that together and put a case of data back to government, assuming this is where data lies, proving the fact that clawbacks need to be changed. I highly doubt it could be anything less than 12 months, but 2 years in the current methodology, it's just got to change. You've worked your backsides off for a deal, you've done your job, you've settled the loan, the client's happy, all's good in the world, there's no fraud. If you do anything illegal, of course, clawbacks will be part of that world. But if everything's fine in the world, you've done your job, you've earned the money. And what's more, you've only got half of it. So remember, trail is the second half of this commission. If I wind back the clock prior to this clawback period being involved, when it didn't exist, you got almost twice the money to what you got now. The clawback was brought in as a part defence into the removal of early discharge fees being passed on to the client if they pulled out early. It was designed to stop brokers from churning portfolios, a very important piece. It wasn't about the single transaction, it was about churning books and portfolios. It was never intended for the methodology that's used today. That's been a liberty taken by lenders, and pardon the pun on liberty, that wasn't intended to them as a lender. But that was, they took advantage of that situation. So the government won't do much more without proven data. So I'm going to go get the data and I'm going to go back and dump it on their desk, and then we'll have another discussion. So in one respect, the conversation stopped, but in another, it certainly hasn't. So we're keeping pushing on that. Of course, there's the 3-year review that is going to happen by the ACCC and the Council of Financial Regulators. That's now probably closer to 2.5 years away, or less. So it's in 2022. And the emphasis was changed on that. We had commitment from government as we were supporting them through Royal Commissions and federal elections, that review will basically revolve around having a look at the model. If it ain't fixed, leave it alone. If it needs tweaking, tweak it. And if it's garbage, then we've got a risk. And then they'll look at moving to a borrower's pay model, which will never work, but they'll do something. So we need to be vigilant. We need to do the right things through best interest duty and the other things that impact that, because best interest duty just doesn't sit on its own with the outcomes of the Royal Commission. I'll talk more about that shortly. But make sure we're doing the right things all the time, and that way we sit in a much better position when this 3-year review rolls around. The other thing that's still in the background, and I'm actually sitting on a House of Representatives Economics Committee review at the end of this month, I'm trying to get the name right in my head, which they're talking about various things within the Royal Commission that haven't been completed yet, and so they'll be getting the drill out, I guess, from a House of Reps point of view, and hopefully those that are sitting on the day, it sounds like a bit of a trial. I know a few of them there, so fingers crossed there's some friendly fire on the other side and we can stand up and answer the questions. But this is one, is the alignment of the regulatory framework and financial planners to act as mortgage brokers. To me, that's what I call the duck syndrome. We can't allow it to happen. If you want to look like a duck, walk like a duck, quack like a duck, you are a duck. So if we allow these things to align in the financial planning sector, then we're going to look like financial planners, and that's our future. And what does that mean? Why is that so important? Well, they're under FOFA laws these days, the Freedom of Financial Advice. That means no commission. So if you want to step down that journey, we ignore that and let it happen. As far as I'm concerned, I'm going to fight that one to the hilt. There may be a little bit of movement, a little bit of give and take, as you've got to do with some of these things, but it can never align, because that will be the future's end of mortgage brokers as we know them today. So we'll fight that one, and fight that one hard. The other things that are still being worked on is the increased obligations on ACLs and also broker misconduct reporting. That's stuff the Combined Industry Forum's working on with lenders and so on. So we're well in front of that, and that is taking steps forward, not completed, but it's moving. Point of sale exemptions in that area to be removed. Haven't heard anything on that one. That'll be an issue for ASIC to be able to justify what's going on there. But that's in the background, as well as conflicted remuneration. Well, that bundles into the best interest duty piece, and that's basically taken care of. Unique identifiers are being looked at and spoken about. That is on the agenda of conversation with ASIC, and so is an industry enforceable code. So our code of conduct will be looking at becoming what they call approved by ASIC. It'll make it an enforceable code. These are things the Royal Commission wants. These are various pieces of things that we need to ensure happen, and as a part of, I guess, the play with government to keep commissions the way they are as well. But don't tell them that. In addition to that, there's RG 209, reverse mortgages education. That's a special piece we've been working on with ASIC, and we'll be talking more on that shortly, where if you're going to work in the seniors lending area, doing reverse mortgages and equity release, you'll need to ensure you've undertaken a certain level of course, which we've worked on with AAMC, which ASIC have given the okay to. So you'll need to do that. But that's not just it, that'll be coming in the coming months. And DDO, design and distribution obligations. Now, this is where best interest duty has three loops. So you have RG 209, best interest duty, and DDO, design and distribution obligations. So going forward, as a broker, you'll need to ensure that your lenders have products that have been, for the sake of a better term, authorised by ASIC under the design and distribution obligations. And that's all around not putting garbage product out to the marketplace. So you need to make sure that you don't have to do anything, but your lenders will need to be able to proactively say to you, this complies with the DDO obligations. And then you have to undertake your due diligence in responsible lending under RG 209, and of course always act in the best interest of the client by putting their interest first. So when we do that education piece I said earlier around the best interest duty, we will tell you how all these three things interrelate and how you need to play them out in your business. It's very, very important that you make sure you're across it, but we will do that with you during that education piece around August. All right. And of course, the meetings with government continue even in this environment. I think I've had more meetings with government and the opposition party in the last 3 months than I probably have had in the last 6 to 8 months. Mainly because there's no travel involved. Everything's being done by Zoom. There's regular conversations, meetings, and discussions going on. So our face-to-face engagement continues. Excuse me. My apologies. On a one-on-one basis, there's no one between the FBAA and the government or the shadow part, the shadow opposition. It's me. I'm having those conversations on behalf of the association and yourselves. There's no third party involved, and the engagements are as strong as ever. And it's good for us, even though in these times it's a very focused conversation around the impacts of the coronavirus. what's happening from a stimulus point of view, how people are moving in the marketplace, but it keeps that conversation alive, and it keeps us as the most predominant face and voice in front of government and the shadow or the opposition ministry out of anyone else in our sector. So very important that we keep those going. They've been going along well. You've heard me say in the past, it's not about waiting for the storm to pass, it's about learning to dance in the rain. And it's raining out there at the moment too. But that storm, that regulatory storm, isn't going. But it's why we talk about certain things in the media the way we do. And over the last, well, I think it's maybe 2.5 weeks, we've spoken across all these subjects, talking about what's happening with the delays in settlements, the ridiculous position where we don't have uniformity or standardised forms across our industry for discharges, application, privacy acts. I had a conversation on fixed rates. Some people don't quite get that discussion for some reason, a little bit beyond me, but anyhow, you know, the banks are out there touting all these wonderful fixed rate. That doesn't mean it's in the best interest of your client. It may not be, right? Because of that, depending on what the client's doing, you need to make an assessment as to whether or not the fixed rate works or not. It may need to be a blended facility with part fixed, part variable, or it may need to start variable. It just depends on their circumstance. So don't get caught by the banks alluring people by cheap fixed rates, because those of us been in the industry a little while, and I'm into 42 plus years now, they get you in on fixed rate. Once the fixed rate comes out, they're the ones to jump the variables. They'll make it up somewhere. Nothing's free in this country. But anyhow, we'll continue to talk about these things as we dance through the storm of the industry in various fashions to make sure the BS is called out and that we make sure that we hold people accountable. That goes with all those conversations, as we've gone through all this already. And also the other piece that we're talking about is the delays in applications being looked at through broker clubs. Now, they do advantage some brokers, but under ASIC's report 516, broker clubs were all but disbanded unless they were based on a qualitative position, or primarily on a qualitative position. Doesn't seem to be happening. We have had members come to us complaining, which is why I put this out in the media, and since then, multiple banks have turned around, we're changing, we're doing this. So it has had an impact. That is taking anywhere to 40 to 50 days to get applications picked up and looked at, unless you are providing volume through broker club, where it could be from 1 to 8 days. That's just not on. You know, what we're doing is not acting in the best interest of the borrower when those things happen, because it's got nothing to do with you as a broker. We all know you're a business professional. We all know you're great at what you're doing. But just because you don't give a lender a certain amount of volume to qualify you in a top-end broker club has nothing to do with the actual borrower at the end of the day. So that needs to get fixed, and we're going to call it out. As I've just noticed on the top line there, I can't spell individual. I'll fix that in a minute. But and for that, I'm going to move on from that screen. Get rid of my typo. But that regulatory storm is also why we're across and involved in the IMBF up the top there. It's all about seeing what's happening with regulation economies around the world, because our government constantly talks to overseas regulators and government as to how they shape policy here. So the IMBF is singularly the most important conversation to be had in today's world. And I established this with Canada. We started back in 2016. I think we launched about 1.5 years ago. But it's the most important conversation being had, because this is what's shaping the decisions of our politicians. And we need to be able to argue it the right way. We need to be in front of the conversations, and we have been on multiple different ones that have come up of recent. So it sets us in a very good position. So the IMBF is an important play with that regulatory storm. So is the Small Business Association. All of the brokers in this country, there's some 19,500 of you across the country, according to ASIC's data. When you wash out the duplicates and all that sort of stuff, you're all small businesses. So if I'm going to look, if the FBAA is going to do the right thing by you, we're going to look after your interests. It's not just about credit. It's about you as a small business person. That's why we're in the FBAA. And of course, you know, in 2016, I started this awareness conversation. Your mental health and wellness is of significant importance to me in the FBAA. So you'll constantly hear us talking about that. And together with the charity, the foundation I established called the Sanity Space Foundation with my wife, we have a special focus because of our own personal situation for parents and carers of special needs children. So if you're in our industry, and we estimate there's around 10,000 families throughout the entire financial services section has a child with special needs in it, make sure you reach out. We're just here to help and support. And it's important that from all of us in business, with the distractions that are around us, whether it be through mental health and wellness, whether it be through delaying credit or loans being picked up, whether it's the whole issues around the Financial Services Royal Commission, all these things are out there to distract us. We got to keep focused on our future, and you always must be. Be aware of what's going on around you. Don't get distracted about it. It's my job and the FBAA's job to ensure that we look after those distractions. But keep focused on your future. So I can tell you that journey is all important. I never planned in my life to do what I do today. And it's most certainly what I do is not a job, nor is it a career. It is my life's journey. I actually started off in school. While I was in high school, I could fly a plane before I could drive a car. So I had my private pilot's license, my PPL. Before I had a license to drive a car, my dad used to drive me out to Bankstown in Sydney so I could go do my flying lessons. And I had planned to be a commercial pilot, and I was doing that with a mate of mine. He did. He just, maybe I should have taken his path. He's just recently retired after finishing his career as a top-end pilot with Emirates flying the A380s. I'm still working, but that's okay because it's my journey. But it's important to understand what your journey is. And just because it starts here, as mine started down there, doesn't mean that's where you're going to wind up. Let your journey evolve. It's your future. It's your journey to travel. And make sure you stay focused on that. And no one said it was going to be easy, just that it'd be worthwhile. And I can tell you from my own personal experience, it's extraordinarily worthwhile. So don't ever forget that. A part of what we've done, and I think Joff touched on it earlier, is our support to brokers during 2020 with the coronavirus. We built out a special program. That program was in part talking about our membership fee payment program. So if you're having a bit of cash flow difficulties, we all get them from time to time. It's not a blight. It's not a bad thing. It's life because shit happens. That you can go on a payment plan with us. So if you want to do that when your renewal comes up, speak to our people in the office, our admin staff, and they'll sort that out for you. We also made a decision at board that we would freeze any review of membership fees. Now, every year, as an industry association, we review membership fees. Do we have to put them up or not? Blah, blah, blah. I go through that. And our account was getting ready for it. Our CFO going, oh, it's that time of the year again. And I pushed through something. I said, yeah, no, there's no review of fees this year. And we're not even going to look at it until after July 2021. And then we'll think about it. We'll see what's happening then. But for now, it's off the agenda. We started a campaign called Call Your Broker. There's a whole host of free collateral, excuse me, available through the Call Your Broker campaign. It's available off the home page of our website. There's a whole host of social media collateral, free stuff that you can use to put out to your database to remind them to call you if they've got any problems. We have blog content. We have video content. We have a specialized training outline, or sorry, educational outline. If you want some help in how you should go about marketing your database, we've been granted the okay for us to exclusively use it. So get onto the Call Your Broker campaign. There's so much stuff there to help you in your business. It's never ending, and it will help set you straight on what you need to do. We also started a part of this called a weekly Q&A with Whitey. That's me. We do that every Thursday at 11:30 AEST. So remember, it's an AEST 11:30. Join us. We're having great conversations. This week we've got a panel of brokers. Next week we're talking to an aggregator. We've been speaking to people about foreign exchange services. We've been looking at a whole range of lending issues and so on. Get into this conversation. It goes for about an hour. It's open to anyone and everyone. All you got to do is register. So you'll begin communications on that. Q&A with Whitey. Make sure you listen in. It's good stuff. And we've got a whole host of educational opportunities that if you're looking to upskill yourself in any area, you got the ability to do it through this time. Together with on the BSP page, the Broker Support Program page, there's a whole range of all the stimulus that's available through government, and it's constantly kept up to date because there are links going straight back to the relevant government page. So the idea there is to give you access to anything and everything you need, whether you're talking to your clients or whether you're talking, looking at yourself, the information's there for you. And you'll be, with the Broker Support Program, you'll see collateral that looks like this. So when you see this sort of stuff come through, you know what it's about. You'll see this one as well. That's Q&A with Whitey. Make sure you get onto that. And they're great conversations, as well as we're keeping going the conversation around your mental health and wellness. We've had workshops. We've got further things coming down the line that we'll be able to announce hopefully within the next month with further mental health support. And we'll make sure that conversation never goes away because it's an important part of looking after you. Well, that's pretty much me done. And unfortunately, I've actually got to get on to an aggregators webinar as well very shortly. So I really apologize. I can't take any questions, but as long as we stick together, we've got this, and have no doubt about where we're heading and what the opportunities are that lie in front of us. And thanks for listening. And I look forward to seeing you face to face, not too far away. And for that, I'll now hand back to Joff. Thanks, Joff.
Thanks, Peter. That was great. It's good to get another update on what's happening in the industry, and keep up the good work, mate.
Thanks, buddy. All right, all the best, everyone. Have a great week. Okay,
let's move on, and we've got some messages now from 3 of our sponsors, Bluestone, Strive Financial, and Trailbook Loans.
Sarah is a florist. Khalil runs his own business consultancy. And Daniel and Rita own 15 coffee shops across the country. But when they applied for home loans, they were all rejected by the big banks. 58% of Bluestone's borrowers are self-employed. Unlike banks, we take the time to get to know our customers' unique circumstances and accept a variety of supporting documents when verifying income. So for your self-employed customers, turn to Bluestone. Bluestone.com.au.
It looks like we're having some difficulty.
G'day legends, hope you're living the dream / nightmare in these uncertain times. Strive Financial coming to you live from isolation. Best thing about ISO, Dad's home more. Worst thing about ISO, Dad's home more.
Listen here champ, you're not in charge yet. On a serious note guys, Strive Financial, we're here to help. We got through the GFC by lending responsibly and maintaining our relationships with our brokers and our clients. And this time will be no different. Phil Joyce once told me, in times of uncertainty, focus on controlling the controllables.
That's pretty professional from you, Dad, considering you don't have pants on. Stay safe, everyone.
And look after each other, and we'll all come through this together.
I'm sorry, everyone. We seem to be having a few issues with my end of the situation. So I'll just fly blind here. Our next speaker is Kerry Sainsbury from Credit Fix Solutions. So Kerry will be talking to us about credit reporting and her top tips for finance brokers. So welcome, Kerry.
Okay, fantastic. Hi everyone, I'm Kerry Sainsbury, the Queensland and South Australian BDM for Credit Fix Solutions. I'll just give you a little bit of a background on me and Credit Fix Solutions in case you haven't heard of myself or Credit Fix Solutions. I have been with Credit Fix Solutions for basically a year now. I have been in the mortgage industry a good 20 years now, which is sad. I think I need to stop saying that. I've been a mortgage broker. I've been a specialist lender, a BDM. I've tried everything, I guess. How I came about Credit Fix Solutions is I was working for a specialist lender and I had a friend that wanted to become a mortgage broker. Now, the mortgage broker had some defaults on his credit report due to a divorce. Now, normally working for a specialist lender, I would be able to suggest a higher rate for a mortgage. In this case, it was to become a mortgage broker. So I asked around, we went to a competitor and was quoted 10 grand up front. I thought there must be a cheaper option. I came across Victoria Costa, who is the CEO of Credit Fix Solutions, and at the time, it's about 4 or 5 years ago, she was charging $9.90. So that's our business model. So we don't charge anything up front. We're no result, no fee, only on success and removal of the defaults, court actions, judgments, CCR, inquiries, things like that. Do we charge a fee? Our fee is roughly $1,500 and we do payment plans as well. That's a bit about us. I'll go into this presentation and hopefully I can value add to your business. We have quite quickly grown. I was the first BDM, now we've got 5 BDMs with us. We do a lot of education and I'm big on value add and education to the finance industry. So we do a lot of education on CCR, all the sort of the new things coming in with credit reporting. So hopefully I can give you some top tips today and add value to your business. That's our disclaimer. I don't think I need to go through that too much. I'm sure you've all read that and you're all over it. We do have, though, a Credit Fix law firm now that we offer free advice as well. Okay, 8 key ways we can help your business and your clients. Load up. So no result, no fee credit repair. As I mentioned, there's no risk. If we can't remove it, there's no fee to the customer. One-on-one free expert consultation. So you'd have your BDM, which is myself, that will assist you, and then you'll have status updates weekly as well from, sorry, won't be a second. I've just got a message to say I don't think you can see my screen. Won't be a second. Can't see the screen. Okay, sorry everyone. Let me have a look. Just trying to escape and show my screen again, everyone. Won't be a second. Sorry, everyone. Day for IT issues, huh? Hopefully you can see that now. I'll keep going to where I was and I'll wait Mariah's text and see if that's helped everyone. Fingers crossed. If not, I'll just keep talking. So one-on-one free expert consultations, fast and thorough investigations. So 3 to 8 weeks is our process, and that's because we have to wait 40 days for the documents to come back from the credit provider, whoever's defaulted that customer, to go through and find errors and loopholes and compassionate grounds. Conversion rate, so we offer a $110 commission, which I know is not huge. However, the end goal of that mortgage or car loan is what we can assist with, and you also are included. Mariah said no slides still. Sorry, everyone, I'll just keep talking. Increase your conversion rates as well. So we've got your income there, plus we can obviously get you that home loan or car loan for your customer. and basically we can educate your clients for free as well. So we offer ebooks, and we've got presentations as well. The ebook is fantastic because it covers everything on CCR and to assist your customers. I guess if you can educate them now before it comes to finance with their credit report, protecting their credit score, understanding CCR can really assist when it comes to finance. So you can't see my preso, so I'll explain it. So I had a example on my preso here that we had a credit score of 441, and we've got a negative data information of 441, and then we've got VITA score 3.25. So the VITA score 1.1 is very handy to know because that's the predicted score for the next 12 months that a lot of the banks are starting to use. It can always be lower. Like I've had some situations before where the normal credit score is 500 and the VITA score 1.1 is then down to 400. So of course, with a lender that credit scores, that's going to completely decline them. So always good to look at that VITA score 1.1. The negative data that shows on the credit reports is actually the negative data before positive. So if your customers have paid everything on time with all their debts or their liabilities, it'll actually bring up the credit score now. And that's, I guess, why it's called positive credit scoring, because if they do actually pay all their liabilities on time, it'll increase the credit score as opposed to just the negative data, which was pre-2014. With credit reporting bodies as well, remember there's 3 credit reporting bodies, not just Equifax. So there's Equifax, there's Alien, and there's Dun & Bradstreet. I don't think you need to do 3 credit checks for every customer, but when you get a feel for that customer that has some RHI issues or some bad credits and defaults, make sure you get them to check Alien, which is the old Dun & Bradstreet, and Experian as well, as that could save you a deal. It's an extra 5 minutes. If they've got a default on Alien, that's a decline when you submit it to the lender and waste hours and hours of your time. So if anyone wants, I can email my ebook through with all that information on it as well. How to fix RHI. So we can fix RHI. Obviously, comprehensive credit reporting is coming mid this year. I'm sure most of you have seen these issues. If the customer has reported if the customer has reported to the lender that they were in hardship or they were going to be late, they shouldn't have actually marked the RHI. So with errors, duplicates, if they've gone into hardship, we can always fix the RHI. So when you're doing credit reports up front, which I think is quite, it's quite necessary, I guess, these days. Always check the RHI with the customers, because if there are some errors, there are some late payments there, which isn't correct, we can always help as well. So annoying that you can't see my preso. So my top tip number 3 was what can and can't be fixed on a credit report. So unfair defaults and court actions, incorrect RHI, duplicate inquiries, incorrect personal information, fraudulent applications. We can't remove legitimate defaults, court actions, legitimate inquiries, bankruptcy, liquidation, ASIC entries as well. 95% we remove on errors, loopholes in the legislation, Privacy Act, and compassionate grounds. I've put some case studies in my presentation to quickly run over with you, so I'll read them out. This is my first case study, I've paid the debt, surely they must remove the default. So a lot of customers think, I've paid the debt, now you should remove it. Unfortunately, it doesn't get removed. They try and get it removed, it doesn't happen. So paid or unpaid, the default's not necessarily removed. We don't need that default paid or unpaid. We're looking at errors. Morally, you may want to have that conversation with your customer to go on a payment plan or make some sort of effort to sort out the actual bill, but we're looking at errors and loopholes in the legislation, why that default's there. So it doesn't need to be paid for us to remove that default, and it doesn't necessarily mean that default will be removed if the customer's paid that default. The next case study I've got here for you, it was a smaller default is easier to remove than a larger default. We've had $120,000 defaults that we've removed easier than an energy default. Energy defaults are quite harder to remove if there's, address change and they've reported it. But to answer the case study, oh, you can see my slides now. Fantastic. Yay, we're nearly finished. I'll just go back, sorry. A smaller default is easier to remove than a larger default. So it doesn't matter on the default, realistically, is what I'm trying to say. $200 energy default compared to $1 million default can remove the same way. Case study number 3, just move my cursor. The debt is unpaid. The credit provider won't remove the default. So the debt is unpaid, the credit provider won't remove the default. So again, she's saying it's unpaid, the credit provider won't remove it. It's unpaid, it's $21,000. Yeah, we need to remove it basically. Case study number 4. So this is a sorry. We've got an example here of what our work does. So we've got a credit score of 522. Over on the right, you've got 722. So again, we've removed the default here. The credit score is instantly lifted up to 722, which most of you know that's now a pass with a mainstream lender. They've gone from a 5% down to a 3% rate. No evidence on the credit report, instantly lifts the credit score, the default's gone. Okay, so that's basically everything that I wanted to discuss. I'm sorry for the tech issues. I hope that I've helped. Again, if you'd like a copy of my ebook to help educate your customers and referral partners, please let me know. My contact details are hopefully on the screen. Happy to chat to anyone. Thank you very much.
Great, thanks, Kerry. And just a reminder that any of the presenters will be able to respond to your questions in the chat if you've got any questions. And of course, Kerry's details, along with all the other sponsors' details, are available on the PDF download that you can download from the control panel of the webinar.
My name's Danelle Brooks and I'm the head of third party at Lend Capital. We're all working through a pretty interesting time coping with COVID-19 in our own businesses, in our friends and family, and in that of our clients. We're really excited to let you know that through the Lend platform, we're still writing loans for your clients, and there are still lenders out there who are offering money. The platform automates the process of matching a SME to a lender using a sophisticated combination of AI and analysis, and is actually smart enough to determine the client's serviceability as well. It's a single application, it's end-to-end deal flow, and we pass on the full commission to you at time of settlement. So reach out to us at Lend today. Stay safe, stay healthy, and stay sane. Thanks.
For decades, small businesses, who are the backbone of the Australian economy, have been struggling to get access to finance. So what we've done is we've created our own proprietary technology that looks at finding ways for them to get access to funding that they otherwise couldn't before. Our CDE, our credit decision engine, which we've built in-house here in Sydney, looks at over 450 data points in 15 seconds. There, we're able to lend them money in a really, really fast turnaround time. So traditionally within 24 hours, but I know of an example where we did it in 26 minutes.
Okay, so moving on. We're really ready to wind up the session now. So a few things to cover off. Firstly, thanks again to our national sponsors for their time and support. As I said, their contact details are in the PDF that you can download. Secondly, you will get the email following the session with the CPD code and your survey. So please complete the survey and let us know how we did. Apologies again for the technical error that we had earlier. Finally, all this webinar recording and all the other webinars that FBAA have done are available on the FBAA YouTube channel. So you can bring up your CPD points with that, and hopefully you'll get a lot of good information along the way. So that's it for today, and So thank you to everyone for attending and have a great day.